G'day everyone, welcome to this weekend general update, and the rally on global markets continues. Now, just before I start on a summary of what happened in the last week, I just want to go back to last weekend. The title of the video was that Australia was in trouble. Now, I've had plenty of communication on this, and I just want to clarify exactly what I said and what I intended to be taken from that message last week. Australia, what I should have put as the title is that Australia is heading for trouble, and I stand by that. And the main reasons are it's apparent that the mining boom, the capital expenditure, investment into the mining sector is winding up very, very rapidly, and that some of the residual projects that are yet to be completed will do so next year. So that's going to take a large amount of stimulus out of the Australian economy. And there just doesn't appear to be anything else that is capable of picking up the slack. Certainly the housing market is not big enough to pick up the slack. The manufacturing side is where you'd normally look. All the signs are not good there. So I think we are going to get a significant retraction in capital investment in this country during 2015. Could be the latter half of 2015. Who knows? We'll have to wait and see. Now, the stock market will start to price that in 6 to 9 months in advance. So what I was referring to last week is not something that we necessarily need to be concerned about right now, because it may not be apparent in the stock market until the end of 2014 or possibly even into 2015. But my point was that the direction that the Australian economy is heading is not good. Unemployment is almost certain to rise, and there's not a lot that we can do about some of these headwinds that are building up against the Australian economy, and hence by definition the Australian stock market. Now, the point about all this is that you need to be prepared. When things are changing, you need to be prepared, and you need to start thinking differently, and you need to start positioning yourself to take advantage of opportunities. Now, what I do is I've got a process that we follow for members, and it's my role to find the opportunities wherever they may be in Australia or external to Australia that we can apply against those rules and disciplines that we use that work very well. So the whole point is that for both members and also for non-members of special share education, you need to be starting to think about doing things differently. So hopefully that really clarifies the intent of what I was trying to communicate last week. So let's get on and have a look at this week. The S&P gained another 17 points, another new all-time high. So it just keeps rolling on there. I get the sense that the momentum on the S&P is waning just a little bit. We'll have a look at the chart in a minute. But the Russell 2000 index, which is your stocks from 1,000 down to 3,000 in market cap size, are still outperforming the rest of the market. So whilever that's happening, the market's still in pretty reasonable shape. So I'm not expecting anything dramatic in the near term. And the economic data in America still continues to push in the right direction. So it's going to be a great couple of years in America, that's for sure. And if you're interested in trading in America and don't know how to go about it, then I can certainly assist you with that. So let's have a look at the S&P. So you can see we've had this amazingly sharp rebound from early February, but just in the last 3 days, you'll notice we had a big up day on Tuesday, which reversed the losses from Monday. But then Wednesday, Thursday, Friday, they were small range days. They all closed off their highs, and it just looks as though it's just struggling for momentum a little bit. But look, it's closing at all-time highs. You can't ask a lot more than that. Let's just look at the Russell 2000. This is the ETF of the Russell 2000 index, and you can see that it's still holding up pretty well. It's actually doing better than the S&P, so that's very positive. And the turnaround that occurred on Tuesday was not only a very powerful one in terms of price, but you can see down here it was a very powerful one in terms of volume as well. The volume through the ETF was more than double the norm and larger than anything we've seen within this field of view. So still very positive signs coming out of America. While I'm here, let's just have a quick look at the ASX 200. It also had a dip, but a recovery into the end of the week, and it's not looking too bad at all. So our market continues to trundle along roughly along the same lines as America. America gained 1.1%. Our market gained about 1% on the week. So still looking okay. So 57 points was the outcome for our index. The gains were across the board, but the small cap performers that are doing well financially, the ones that are coming in with good results and making smart acquisitions and generally progressing their business, are being pretty well rewarded by the market. There's a few that aren't, that are doing well, that the market is still a bit unimpressed for whatever reason, but most of them are performing quite well. Now, gold gained $12 on the week. It was a very choppy week. Some, bigger moves backwards and forwards, no real headway. But it's looking to me more like a consolidation in the price of gold than a retracement. And it's the same sort of pattern with the gold stocks as well. So they pretty much ran in tandem last week. Silver weakened on Friday night. Up till then, it had been tracking along with gold, but silver does tend to be more volatile, and it copped a bit of a smack on Friday night. Copper was down sharply to $3.09 on Friday night, so I'm not quite sure what that's about, because there wasn't a lot of difference in the currencies. So I'd be interested to know why copper was down so sharply. Oil was steady at 103. So let's just have a look at gold. So there's the gold price. We've continued to work our way higher. The lows were in December. Since then, we've had a run followed by a consolidation, almost no retracement. Then another run. We're getting another consolidation here, but no real retracement. So this is looking really strong. I've got to say that the chart for gold looking very strong. Now, I had a couple of technical hurdles. We had one at 1339, which was the 61.8% retracement of the last decline. We also had some peaks at around 1360, and it was those peaks that the price of gold has gone up to and then consolidated from. But ultimately, we're looking for 1435 to 1440. We want to close above there would be the ultimate confirmation. Just looking at the GDX index, you can see same pattern, a rise, consolidation, no retracement, a rise, consolidation. So looking pretty good there. And if we look at the junior miners as well, it's the same pattern. So things looking pretty good for gold stocks internationally. Local gold stocks not doing quite as well. You've got to be very selective in the Australian market. There aren't a lot of good ones. So, make sure you know what you're doing with the Australian market in gold and gold stocks. There's the spot copper chart. Might be a little bit hard to see, but there was a sudden plunge on Friday night down to just below $3.10. So I'll be interested to find out what that's about. So from an overall strategy point of view, 2014, I've been saying it since basically the middle of last year, that as you get more and more advanced in a bull market, it becomes more volatile. Therefore, your game plan in how you're tackling the market is even more vital than normal. And in my experience, the thousands of traders that I've worked with, it's the one fundamental that a lot of people fall down on. They either don't have a game plan at all, or they think they have a game plan, but it's not really that well thought out. And as soon as the market does something unusual, the game plan usually falls apart. So really, really critical this year that you've got that side of things sorted. Now, there's always opportunity somewhere. As I said at the start, it's my role for members to make sure that I identify those opportunities so that they've got things to fire at. That means that sometimes you've got to look in different places. And, it's Australia. There's always going to be opportunities to make money in Australia. but I think it's fair to say that there is going to be more opportunities and stronger trends in places like America as well. So I'd really encourage you to open up your mind to thinking about looking in different places. But more important than where you look and what you trade is the fact that you've actually got a disciplined process that you're adhering to. Because if you don't have that, it doesn't really matter where you look. You're not going to trade very effectively. Gold stocks still look like a new phase two is underway, so I expect gold stocks to do well in 2014, and yeah, we'll keep tracking them on a week by week basis. So that's it for this week. Cheers.